have Geoffrey Garrett, Dean at USC Marshall School of Business, joining in with us in the studios this morning to talk to us about US macros, everything that's happening in the world. Geoffrey, thank you so much for joining in with us. It's a pleasure having you, and thank you so much for coming down.
It's my pleasure. There is certainly a lot going on in the world. So.
A lot is going on, and a lot is going on in US. Let's start. The year began by Trump taking over, coming in as the new president, second term. You know, your view firstly in terms of the economy currently that's going on in the US, new president coming into place. What are we watching out for? Because tariff surely started trending post his coming back. So what are we doing now?
So maybe just one step earlier than economic policy, I think is the overall perspective of this month has been that Donald Trump is doing or trying to do exactly what he said he was going to do when he was running for president. I think the real issue now is whether he can actually implement his agenda. So with a lot of the domestic stuff, it's now hung up in the courts. The courts are going to have to rule on the extension of executive power. And then with respect to international policy, tariffs above all, there's been a lot of bluster. The reciprocal tariffs announcement obviously was a very big one, but we've seen the president be willing to pull back from tariffs because I think he's worried about the inflationary consequences in the US of imposing big tariff increases.
Geoffrey, one thing that's clearly being mentioned is that world trade, as we know it, is going to change, right? Reciprocal tariffs. Does this actually work for the US economy? Because especially if you look at a country like India, we are exporting quite a lot of pharma, and it comes at a cheap price as far as the US consumers are concerned. So sectors like pharma, sectors like IT, where Indians actually do quite a lot of the groundwork. Does it actually work if he actually puts in a reciprocal tariff?
So wearing my economist hat, of course, I would say no, that reciprocal tariffs are very cumbersome, very complicated to implement. And as you said, in general, yes, India runs a trade surplus with the United States, but American consumers benefit. We've seen that in the IT sector. You mentioned generic drugs. I think that's true. But the Trump view is that trade deficits, it's like a win-loss record of your favorite sports team. A deficit means we're being taken advantage of. But if I was in the prediction business, and we've seen lots of examples of this, I actually don't think President Trump or the administration actually wants to impose tariffs. What they want to do is change the deal. Donald Trump is the deal guy. And so I would expect with respect to India, rather than implementing reciprocal tariffs, again, really hard to do, if there are some win-win concessions that India could make in terms of US products coming into India, that strikes me as the much more realistic path forward.
Right. Jeff, today I was looking at some data, especially coming in versus the rates that India as well as Asian countries actually charge in terms of tariff versus what US is being charging these countries. And quite a huge difference, right? We see in terms of the rates. So whether you look at India, I mean, we're charging much higher rates versus other Asian countries, China, South Korea, do come in that play. How does that whole come into the picture as well? Because there is a huge gap still between US and India, right?
Yeah,
so there would be some bit of a tariff or something that comes in.
Yes, again, economists have thought for a long time that it made sense for emerging economies to have higher tariff rates because you want to protect what we've always called infant industries. Then in a case like India, you obviously have agriculture playing an enormous role in the economy, and the whole world protects agricultural products. The US does too. So if we're looking at the global economy, Indian tariffs aren't a central story, right? The big narrative in the US is both for economic reasons and for national security reasons, the US wants to decouple from China. Then there's all this fallout for the rest of the world, and I think that it's complicated to navigate that, but the decentering the global economy away from the China-US axis actually creates a lot of opportunity too. One example that is talked about a lot in the United States that I'm sure your viewers are familiar with is moving the Apple supply chain from China to India, right? That makes geopolitical sense for the US, but it's a great opportunity for India.
So de-risking from a sole global supplier to actually having multiple moving parts within the supply chain is something that you're looking at. Well, coming back to the Indian context, you said that certain goods, like you've actually seen a cut in tariffs as far as bourbon is concerned, also expecting a cut as far as American motorcycles like Harley Davidson is concerned. Will that satisfy Trump? Number one. Number two, there's also been quite a lot of worries in terms of US aid being cut off. And multiple articles, multiple news reports indicate that there's been complete cutoff of funding as far as these important programs are concerned. Elon Musk has come out and said that we will rectify our mistakes immediately, but on-ground reports suggest otherwise. So what do you think is going to happen next?
Okay, two big topics. With respect to Indian concessions to the United States, obviously the ones we've seen are symbolic, not enormous dollar value attached to them.
Right.
Predicting the future is difficult, but I would think that if India did two things, said it would buy more American fossil fuels. The US is now an oil and gas exporter. Buy more fossil fuels and buy more military equipment from the United States. Those would be big wins for the Trump administration. And again, I would expect that the tariff pressure would go off if India did that. Now, neither of those things is easy for India. I understand that, but I think that would be a path that would work. With respect to foreign aid in the US and USAID, there's a political reality in America that voters think that the aid bill is enormous, right, and that it's squandered, spent on bad things. So politically, taking on USAID was a very smart thing for the Republicans to do. And you've noticed that even the Democratic Party isn't defending USAID because they know it's not politically popular domestically. But I think you're right that foreign aid programs have been incredibly important and very good soft power for the US. And I worry that one thing that's happening at the moment is that the US is withdrawing in areas like aid, and the Chinese government is investing big time, right? The Belt and Road Initiative and everything that goes with that. So I think from a geopolitical standpoint, foreign aid is a valuable thing.
Another question, when it comes to emerging markets, there's been significant repercussions as far as currencies are concerned. How do you look at the Chinese currency, the Indian rupee, and also, do you currently feel China is better placed versus India when it comes to global money management? So
it's interesting that the world often flips, right? So for the last 5 years, India's been the hottest place in the world and China not so much. I think the last 6 months, obviously we've seen foreign money flow out of India. One of the reasons for that is that there's money to be made back in the United States, but another is what was a gradual turn, but looks like an accelerating turn of embracing business back again in China. So we had fiscal stimulus in China in the fourth quarter. Then we had this incredible DeepSeek announcement. And just overnight, Xi Jinping hosted all of the big tech leaders, very symbolically hosted all of the tech leaders, including Jack Ma, in Beijing. So I think the markets and foreign money will react very positively to that. So there's obviously the underlying economic context here with the consumption challenges and things like that. But it seems to me that there are international reasons why some foreign money might move out of India, continue to move out of India.
Okay, Jeff, thank you so much for joining in with us in the studio, helping us understand the macro data, the economic data points of view coming in from across the globe. So thank you so much for coming.
My real pleasure. Thanks for having me.
Thank you so much for that. And on that note, we're going to slip into a very short break. Viewers, don't go anywhere. We'll be back with more news and updates after this break.